The Bogleheads Guide to the Three-Fund Portfolio by Taylor Larimore is an insightful and practical book that distills the essence of successful investing into a simple yet powerful strategy. This strategy is based on the teachings of John C. Bogle, the founder of Vanguard Group and a pioneer of low-cost index investing. The book is part of the broader Bogleheads series, a collection of resources inspired by Bogle's principles, which have become a movement among individual investors seeking to achieve financial independence through disciplined, low-cost investing. Overview of the three-fund portfolio. At its core, the book advocates for a minimalist approach to investing, the three-fund portfolio. This portfolio consists of just three broad-based index funds. Index Fund Number 1. A total stock market index fund. This represents the entire U.S. stock market, capturing large, mid, and small cap companies across various sectors. It offers diversification within the U.S. equity market and is typically the largest component of the portfolio. Index Fund Number 2. A total international stock market index fund. This fund captures the global equity market outside the U.S. It provides geographical diversification and exposure to international economies. Index Fund Number 3. A total bond market index fund. This fund represents the U.S. bond market, including government, corporate, and mortgage-backed securities. It serves as the portfolio's stabilizing force, reducing overall volatility and providing income through interest payments. Simplicity and diversification. One of the book's key messages is the power of simplicity in investing. Taylor Larimore emphasizes that a complex portfolio is not necessarily a better one. In fact, simplicity often leads to better outcomes by reducing costs, minimizing taxes, and making it easier to stick to an investment plan during market turbulence. The three-fund portfolio offers extensive diversification with just three funds. By owning the total U.S. stock market, the total international stock market, and the total bond market, an investor gains exposure to thousands of individual securities across different asset classes, sectors, and regions. This diversification helps spread risk and reduces the impact of any single investment's poor performance on the overall portfolio. Cost efficiency. The book strongly advocates for low-cost investing, which is a cornerstone of the Bogleheads philosophy. Larimore highlights that investment costs, including expense ratios, transaction fees, and taxes, can significantly erode returns over time. The three-fund portfolio, consisting of passively managed index funds, typically has very low expense ratios compared to actively managed funds. This cost efficiency translates into more of the investor's money staying invested and compounding over the long term. Asset allocation and risk management. Larimore discusses the importance of asset allocation, which is the process of dividing an investment portfolio among different asset categories, such as stocks, bonds, and cash. The specific allocation should be tailored to the individual investor's goals, risk tolerance, and time horizon. For example, a younger investor with a longer time horizon and higher risk tolerance might have a higher allocation to stocks, perhaps 80% in the two stock index funds and 20% in the bond index fund. Conversely, an older investor nearing retirement might shift to a more conservative allocation, such as 60% in stocks and 40% in bonds, to reduce risk and preserve capital. Larimore emphasizes that the right asset allocation is one that an investor can stick with through thick and thin. He cautions against making emotional decisions based on market movements, as attempting to time the market or chase performance often leads to suboptimal results. Rebalancing and maintaining the portfolio. Another critical aspect of the three-fund portfolio strategy is rebalancing. Over time, the performance of different asset classes will cause the portfolio's allocation to drift from its original targets. Rebalancing involves periodically buying or selling assets to bring the portfolio back to its desired allocation. Larimore suggests rebalancing either on a fixed schedule, e.g. annually, or when the allocation deviates significantly from the target, e.g. by more than 5–10%. Rebalancing helps manage risk by ensuring that the portfolio does not become too heavily weighted in a single asset class. Behavioral finance and the Bogleheads philosophy. Throughout the book, Larimore touches on concepts from behavioral finance, a field that studies the psychological factors influencing investor behavior. He warns against common pitfalls such as overconfidence, recency bias, the tendency to give more weight to recent events, and herd behavior, following the crowd. The Bogleheads philosophy, as articulated in the book, is one of disciplined, long-term investing. It advocates for ignoring the noise of the financial media, resisting the temptation to chase hot stocks or market trends, and staying focused on a well-thought-out investment plan. Larimore reminds readers that market downturns are inevitable, but with a diversified and properly allocated portfolio, investors can weather the storms and achieve their financial goals. Conclusion: The Bogleheads Guide to the Three-Fund Portfolio is a concise and compelling guide to building a successful investment strategy based on simplicity, low costs, and broad diversification. Taylor Larimore presents a clear, actionable plan that is accessible to both novice and experienced investors. By following the principles outlined in the book, investors can increase their chances of achieving long-term financial success while avoiding the pitfalls that derail many others. The book's appeal lies in its straightforward approach and the fact that it demystifies investing, making it accessible to everyone. It embodies the spirit of John Bogle's legacy, empowering individual investors to take control of their financial futures with confidence and clarity.